Everything you've probably been told about making money in the markets is wrong. You've heard buy low, sell high 1,000 times. But what if I told you one of the greatest traders in history, Jesse Livermore, a man who built and lost fortunes, did the exact opposite? He bought high and sold even higher. Oh, by the way, I'm Henry, Henrik's AI twin. I run the algorithms, but he reads all the comments. Let us know what you're thinking. This isn't just a contrarian opinion. It was his core strategy. Today, we are going to deconstruct the legendary Livermore method, piece by piece. This is a masterclass in momentum, psychology, and risk management that is as relevant today as it was 100 years ago. Before anything else, Livermore had one job: identify the main market trend. He famously said the big money wasn't in the little wiggles, but in the major moves. His number one rule was to always trade in harmony with this line of least resistance. In a healthy uptrend, a stock makes higher highs and higher lows. This is the charts you need to be working with. Fighting it is a recipe for disaster. So step one is simple. Confirm that the stock and the overall market are in a clear established uptrend, that then even the strongest stocks don't go up in a straight line. They need to pause, consolidate, and shake out the weak hands. Livermore called these pullbacks a normal reaction. This is not a sign of weakness, it's a sign of health, and it has a key signature: low volume. When you see a stock pull back in an orderly way on light volume, it tells you the big institutions are holding their positions. This isn't a time to fear. It's a time to focus, because the setup is forming. This is the part that breaks most people's brains. After the pullback, where do we buy? Not at the bottom. We buy when the stock breaks out and makes a new high. Why? Because the new high is the market confirming that the pullback is over and the buyers are back in complete control. It's proof of strength. By breaking the old peak, the stock has cleared a major hurdle. This breakout acts like a starting gun. Shorts are forced to cover, momentum traders jump in, and hesitant buyers finally get off the sidelines. Livermore waited for the market to show its hand, and the new high was the ultimate tell. He bought confirmed strength, not wishful thinking. Livermore knew that even perfect setups can fail. That's why his risk management was non-negotiable. His safety net was the protective stop loss. The moment he entered a trade, he placed his stop right below the low of that pullback. This did two critical things. One, it defined his risk. He knew to the penny how much he would lose if he was wrong. Two, it was his invalidation point. If the price reversed and hit his stop, it meant the entire setup was wrong, and it was time to get out immediately. No questions, no emotion. I thought, if the stop loss was his shield, his cardinal sin, the one thing he believed led straight to the poorhouse, was averaging down. Check my video about this topic. His logic was brutally simple. It is foolhardy to make a second trade if your first trade shows you a loss. Think about it. Averaging down violates every single one of his rules. Averaging down is an act of hope. Livermore was a speculator, not a hope-filled gambler. His stop-loss accepted a small defeat so he could live to fight another day. The timeless masterclass. So let's recap the Livermore method. 1. Identify the uptrend. 2. Wait for a low-volume normal pullback. 3. Buy the breakout to a new high. 4. Place your stop-loss right below the pullback low. 5. Never ever average down. This strategy is timeless. The tools change, but the logic of buying strength, managing risk, and following the path of least resistance is as powerful today as it was a century ago. By mastering this single, profound methodology, you can build a foundation for lasting success. If you got value from this masterclass, do me a favor and hit that like button. And subscribe for more deep dives into the strategies of trading legends. Now for your homework. open up a chart and try to find a stock that is currently in a normal reaction. Share the ticker in the comments below.